Tesla is a game changer, a company that combines cutting-edge technology, environmental leadership, and a charismatic leader. All this makes Tesla not just a car company, but a diversified electric energy company with a bold mission, and that is to accelerate the world's transition to a clean and renewable future.
Point of what Elon Musk is saying, he said, I'd rather gain market share and have more people have access to EVs than looking at the margins. When we look at the way Tesla trades, you know, there's always, is it an auto company? Is it a tech company? What do you think about the current valuation of a stock like Tesla, and where do you think it is fairly valued?
Look, Tesla's going to do roughly $100 billion in revenue. People always used to say, Tesla's a cool company and the cars are nice, but they're not selling many vehicles. Well, now they're selling a lot of vehicles at $100 billion revenue, growing 40% a year. I think having a 6x revenue multiple is probably fair, and I think there's a lot of upside for growth. What people forget is they're still profitable, and they still have an edge in both manufacturing, over-the-air software, and other things that other companies just can't duplicate. The big picture here is, can the Chinese, with their lower-cost battery and lower-cost manufacturing, compete with Tesla's edge, which is the most advanced production facility in the world and the ability to sell over-the-air software faster than anyone. The other thing that's fascinating for me that most investors, I think, don't really factor in is the fastest growing part of Tesla is their energy division. So they got multiple things going on. I think Tesla and BYD, frankly, appear to be pulling ahead of the crowd, and investors have to reward that.
Tesla CEO Elon Musk has said that in the future, not only will half of the cars produced in the US be electric, but they'll also be autonomous. He said that in a few years, it's going to be hard to find a car that isn't autonomous. Judging by the current and expected trends in the use of electric vehicles, what do you think the future is going to look like for EV companies like Tesla? Will EVs continue to become popular across global markets, or will they eventually fade with time? What does the future look like for electric vehicles? There is a lot that can happen in this industry, but first, let's take a look at how the EV market is currently performing. And as a plus, we'll also look into the possible factors that are going to enable the market to keep going. Let's dive in.
Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Yeah, thank you.
We're talking one of your favorite subjects, Andy, and that's Tesla. Really good delivery numbers. It seems like the pricing that they've implemented over the last 6 months has really taken hold as demand remains robust for at least two of their models.
Well, yeah, absolutely. You know, I think that the writing was on the wall actually about a year ago with Tesla when, gas prices were through the roof. I think that's when a lot of people decided that their next car was going to be electric, or at least they would give it serious consideration. And among electric vehicles, really, Tesla is the only player worth talking about at this point. Their lead is so gigantic and growing at this point. And I think, for us at Likefolio, we really watch two things when it comes to Tesla. Of course, we're watching the gas price concerns and electric vehicle demand and things like that. But for Tesla specifically, we like to look at the number of people talking about it on social media, which is down year over year, 23%. For us, this is actually one of those very rare situations where we think this is actually a good sign, because last year what was happening was you had a confluence of two things. You had, high gas prices, and you had the CEO of Tesla, Elon Musk, embroiled in this entire drama around buying Twitter, which really distracted, I think, the shareholder base and Wall Street in general. So Tesla was a huge topic of conversation without it really being about the cars. And so now I think that has changed, and most of those mentions are about the cars. And we see that when we look at Tesla web visits, which are up 26% year over year, near all-time highs. And what this tells me is that, Tesla at this point is now part of the normal car shopping experience. It's not just this one-off kind of weird EV brand luxury that is out there that people don't really think about. When people are starting to look at purchasing cars, they're starting online, first of all, because the dealer lots have disappointed them time and time again. And so they start online, they end up checking out Tesla. They see how affordable these cars are. This company is set to benefit in a really, really big way, not just from the EV boom. I think that Tesla has moved well past that and is just a really iconic, almost luxury brand that now a lot of people can get into for $40,000 or less, which is very impressive the way they've executed on this strategy.
Tesla has recorded unprecedented demands over the past few years. Although there are concerns about price cuts on vehicle sales sold in the United States and China, which may attribute to a possible demand problem, the car company's well on the way to poise itself to continue leading in the industry. The automaker has led the electric vehicle industry for years, and it's going to keep outselling its peers while maintaining higher margins. But in order to stay ahead of other electric car companies, Tesla needs to be able to continually increase car sales and also record higher industry-leading figures. Will Tesla be able to do this? Let's find out. And what effect is this going to have on Tesla stock? Hey guys, welcome back to Tesla Tomorrow. Several analysts have said that they believe there is an increase in the demand for electric vehicles at a rate that has never been seen, and this could be very correct. In 2021, electric car sales were only 10% of China's car sales, indicating an increased demand for EVs in the country. Likewise, Europe also had rising numbers in EV sales, recording about 1.1 million EV deliveries in the first half of the year, making up about 20% of their car sales, while electric vehicles represented 6% of all passenger vehicles delivered in the United States. About 6.6 million global EVs produced were recorded in 2021 from 3 million the year earlier, and this shows that there is an increase in demand for EVs, which may signal a massive shift towards clean energy. In the past decades, the demands for electric cars has increased tremendously, and now more than ever, more people are buying and using electric cars and vehicles. In general, most Tesla bulls believe that there is an increase in the use of EVs, and that will have a positive effect on the automaker's car sales and demands. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla is a pioneer in the EV industry, and has grown its market share and revenue by enhancing its technology and scaling up its production. However, Tesla is not exempt from market fluctuations that affect the EV sector, and its sales and deliveries may vary accordingly. Nevertheless, many analysts, experts, and investors remain optimistic that Tesla will eventually surpass the market performance. Ross Gerber, the CEO of Gerber Kawasaki Wealth and Investment Management, said that electric vehicles are the future, and there is no reason to be pessimistic about them. The transition to electric cars is accelerating, and many people and countries are realizing the advantages of using clean energy. For instance, Australia has been implementing policies to encourage the adoption and use of electric cars. Recently, the Australian government announced plans to introduce new regulations to make electric cars more affordable and increase their sales. Other countries have similar policies to reduce emissions from gasoline cars, which could cause severe climate change if not regulated. The Canadian government, for example, has mandated that all new light-duty cars and passenger trucks sold in the country must be zero-emission by 2035. And this is why Tesla's semi-truck will benefit greatly from these policies.
When I look at all the topics that we could talk about when we're looking at Tesla, we could talk about the Cybertruck, we can talk about the Tesla Semi, we can talk about the charging network, we can talk about autonomous driving, we can talk about green energy and energy storage, AI, robotics, the robo-taxi, all these names that we're talking about, and the other side always wants to talk about valuation, right? This is, this stock is overvalued, it's got valuation problems. And they also say the price is coming down, that could be margin problems. But I want your honest opinion. Is the street reading this wrong with the margins? I see Tesla pressing its advantage when it comes to margins because he's got room on margins to come down and almost strangle the other EV makers and still make plenty of money. And you see the numbers, you see the deliveries. people see that as desperation from them lowering the prices. I think he has got a chokehold on these other companies, and he's using it. Andy?
Yeah, we were on this show with you guys, I think, just a few months ago talking about this. And I tried to make the case at that time that this is a strategic move. This is not a move out of desperation. We see it in the data time and time again that demand for Tesla vehicles is very, very high and growing. It's not a move out of desperation. This is a competitive move like you talk about. And I would add to that I think what Tesla has that other car manufacturers, forget EVs, other car manufacturers in general don't have, is that the more cars that they can sell and build, the better and more scalable their operations get. The way that they've set up these factories, these gigafactories, is actually the more they produce, the more efficient they get, the more their costs come down. It's an unbelievably scalable operation. And so I think that lowering the price in order to continue to keep demand growth going is exactly what this company should be doing. And like you said, they're profitable on every unit that comes out the door right now, and there's more room in that per unit profit margin to compress even further and bet on themselves. So I think this is well beyond an EV play at this point. This is actually something that I think GM, Ford, Toyota, all auto manufacturers, whether EV or traditional, are starting to become very concerned that Tesla is running away with the overall auto market, and it's a matter of time before that comes to fruition.
Musk has said that the semi-truck could help fight climate change. He also said that the truck is quiet and will improve air quality and the health of people living near highways. He also called the semi-truck a crucial piece of the puzzle that will support Tesla's mission to speed up the shift to a more sustainable energy source. And interestingly, Tesla is already prepping to produce these trucks across various markets around the world. More people are interested in electric vehicles, which is a positive sign, as more governments are likely to adopt similar policies, and moreover, oil prices have been unstable in recent years and may even rise in the future. Therefore, by switching to EVs, it may be more cost-effective than using ICE cars. However, the growing demand for EVs may also drive up their prices. Currently, the average price of an EV is less than $70,000, but with the high demand, these cars may become more expensive.
Social media mentions on your one chart, it says it's down a little bit, but they continue to outperform on the delivery side. I think they're believed to deliver about 1.8 million cars so far this year. Do they need, Andy, in your opinion, and some of the data that is reflective that out of Likefolio, do they need more models? Because it seems like the Model S and Model X just don't sell a lot, right? They don't produce a lot. It's all Model Y and Model 3. Do they need new models? Because you know what? BMW, Mercedes, Volkswagen, the GM, Ford, they're coming for them with a wider array of models. Is that going to be something that they can sustain if they just stick with these basic four that they have and then add that truck?
Yeah, I think adding the truck will be huge, and give them an entirely new, fairly untapped market at this point. I do think that there's room even below the Model 3 in terms of price point. I think they're going to target that. And I think Tesla will have, a car out there in the maybe $18,000 to $25,000 range that just, could completely change the way the company is viewed by consumers more globally, I think, than in just the United States. But yeah, I tend to agree with you. I think they've done a good job of focusing on the models that they do have. They have a nice breadth of price points, all the way from, the Model X, which I think can be 120, 130,000, all the way down to the Model 3, which you can get for probably under $40,000 right now. The very low price point they're missing. But all in all, people really do like these cars quite a bit. And I think they're not going to have to be like a Toyota or a Ford that has to have 7 different models and varieties and brands inside of the same price range. The Tesla name so far is coming through as being a high quality product that people really like. And so I think they're good from that standpoint.
In an interview last year, Seth Goldstein, equity strategist at Morningstar, cited the importance of investing in clean energy. According to him, Investing in raw materials like lithium, which is a major requirement for making EVs, is one of the best ways to support EV adoption. All EV batteries need lithium, as its energy source is a key component. And by investing in lithium, you are investing in the availability of more EVs on the road. According to Goldstein, the increasing EV market will have a positive effect on the demand for lithium, and that could also be another profitable investment. This is evident by the demand for clean energy infrastructures, which will be high in the next few years. And so Tesla is going to be well positioned to benefit greatly from this increased demand. Likewise, Tesla may be expanding into solar and clean energy, another possibly lucrative venture. Aside from cars, Tesla also makes solar panels, which will drive enormous sales and profits for the company. Tesla is reportedly rated as one of the largest solar installers in the US, installing solar panels and solar roofs in at least parts of 25 states in the country. This is only one of the many possible markets for Tesla, and it could potentially sell its solar panels in these. With more markets, the company can further increase its revenue and profit margins.
If I think that there's room for this stock to be, as crazy as it sounds, I think this could be a $700 to $1,000 stock within a few years. I think there's a lot of volatility in between here and there, as we've seen in the past. Probably due for a pullback. It seems like a lot of the great news is already baked into the cake, but this is one to put on your watch list. And anytime it gets that 20-25% pullback, might be worth picking up some shares.
Yeah.
The EV market is expected to grow rapidly in the future, and this will give Tesla a big advantage as the other top electric car makers are going to struggle to keep up. With Tesla as the top car maker and a broader customer base than its rivals, well, we're going to see Tesla enjoying strong demand for its electric cars, and it could increase further with the projected rise in popularity of EVs. Analysts believe that as more people will choose electric cars, the market share of Tesla and its competition will depend on how fast they can produce more vehicles to meet the growing demand for Tesla cars. Tesla is also working on reducing the cost of making its EVs, and it's already slashed battery costs of the Model Y by up to $3,000, but it aims to cut costs even more by using a dry coat process for its 4680 batteries. While some experts have doubted Tesla's ability to achieve this, the automaker still has a good chance of succeeding. Ross Gerber thinks that investing in EVs and Tesla could be the best investment opportunity of the decade. The Tesla Bulls also said that he will focus on EVs as a theme over the coming years. However, there is one thing to note, and this is that despite analysts' bullishness on the subject, many have acknowledged the general investment risk that should be taken into account when investing and looking into investing in promising fields like EVs. But what do you think? Are EVs here to stay? Let us know down below, and don't forget to tell us what your price target is for Tesla stock. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.